Ladies and gentlemen, good afternoon and welcome to Rishi Laser Q2 FY26 earnings conference call hosted by Confidely Partner. As a reminder, all the participants' line will be in listen mode only, and there will be an opportunity for you to ask questions further the presentation concludes. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference may contain forward-looking statements about the company which are based upon the beliefs, opinion, expectation of the company as of the date of the call. These statements do not guarantee future performance of the company, and it may involve risks and uncertainties that are difficult to predict. Participants are requested to ask three questions at a flow so that everyone is entertained utilizing the management time. I would now like to hand over the floor to Mr. Rajneesh from Confidely Partner. Thank you, and over to you, Rajneesh.
Thank you. Good day, ladies and gentlemen. Rajneesh Mishra from Confidely Partners. We represent the investor relation for Rishi Laser Limited. On behalf of Confidely Partners, I warmly welcome you all to Rishi Laser Q2 FY26 earnings conference call. The company is today represented by Mr. Harshad Patel, Managing Director, and Mr. Ganesh Agarwal, Chief Financial Officer of the company. With this, I would now like to hand over the call to Mr. Harshad Patel for his opening remarks. Thank you, and over to you,
Yeah,
sir.
thanks, Rajnish. So good afternoon, everyone, and welcome to this Q2 earnings call. Warm welcome to all participants who are joining for the first time. We really appreciate your interest and look forward to taking you through the journey and progress. We are pleased to share a major milestone this quarter. Our new plant at Malur has successfully commenced operation. Facility has already begun proving over 1,000 parts for Caterpillar, which we previously supplied from our Bomsandra plant. As part of this ramp up, manpower costs in the current quarter will be elevated since we are deploying resources at both the plants. This is a deliberate investment to ensure uninterrupted supply, build buffer stock, and complete the reproving from the new plant. While this places short-term pressure on margins, it's a strategic step for sustainable growth. Looking ahead, robotic automation, particularly in welding, will be the game changer. It will differentiate us within our supplier category, improve efficiency, and unlock many new opportunities with this customer. In addition, our new paint shop facility is expected to go on stream in Q4 of this financial year, further enhancing our capabilities and broadening the scope of our services that we can offer. The revenue contribution from Malur plant will begin in Q4 of this year, with a significant ramp up expected in next financial year. We are now at final stage of transitioning operations, which will be completed by end of November. Parallelly, new RFQs are being processed and first articles are being proven on the robots. This transformation represents a forward-looking investment that positions us to scale our business substantially in the years ahead. Let me now speak about the financial performance for the quarter. In Q2 26, revenue was at 42.9 crores as against 39.14 crores in Q2 25 and 41 crores in Q1 26. This was a marginal growth of 9.8% and 4.65% over the previous respective quarters. To some extent, the growth has been muted due to lower steel prices in the current year as compared to last year. EBITDA improved from 3.57 crores in Q2 25 to 4.6 crores in 26, with margins growing from 9.1% to 9.93%, primarily due to better product mix. On half-yearly basis, revenues for 6 months FY26 increased to 84 crores, up from 76 crores in the previous year. and EBITDA went up from 6.5 crores to 8.25 crores, with margins improving by about 100 basis points. Overall, the financials reflect steady growth, improving operating leverage, and stable profitability. Despite sluggish demand from the earth-moving industry, we have achieved some growth because of improved utilization at our Pune and Vadodara plants, as well as improved exports. Our customers from the earth-moving industry have indicated a significant ramp-up of output by about 30% from Jan 26 onward. We are adding new customers at our Bomsundra plant to occupy the capacity released by the shifting of Caterpillar business to the new facility. Looking ahead, our focus remains on sustainable double-digit growth, driving further margin improvement, accelerating automation, and expanding our presence in the high-potential sectors like electricals and construction equipment. Before we move ahead, I'd like to take this opportunity to extend my sincere gratitude to all our investors, partners, employees, and stakeholders for their continued trust and support. With that, I now open the floor for any questions that you may have.
Participants are requested to raise their hands for the question. Also, one can raise their question in the Q&A box. Now, we have Mr. Guneet Singh. Sir, you may unmute and introduce yourself.
Hi, I'm audible.
Yes, yes.
So, our margins were before FY23 were about 4% or less, and currently they're at 9%. So, what is the reason for increase in margins from 4 to 9%?
Yeah. Okay. Further, anything else?
You want me to ask all the questions
Yeah,
right?
please. Yes, yes.
Like,
Please do that. Yeah, so that I can answer them all at a time.
so,
Yeah.
are these margins sustainable in the long run? Uh, my next question would be, what is our current capacity and what is the revenue potential from our existing capacity, excluding the new Bangalore plant? And what is the current capacity utilization? And my third question would be about the Bangalore plant. So, at what level of revenues will the plant break even? And by when should revenue start flowing in from the Bangalore plant? And I would like to understand the ramping up of the plant. So in FY26, what kind of revenue would be coming in from the Bangalore plant? And by FY27, and what should be the expected, since you mentioned that margins would be under pressure because of that. So what should be the expected loss from the Bangalore plant for the coming quarter or for the second half of FY26?
Right. Got it. So I think if we go back a few years, the margins have been continuously becoming little better. Primarily, our raw material consumption, that means the operating margin, raw material consumption to sales ratio, that has been improving. That is due to better processes, and more than that, I would say that the kind of orders that we are executing are of a little bit more complex nature than what we used to do in the past. So that is leading to better kind of margins than before. And we have kept a threshold also for accepting orders. If there is a lower than a certain value addition, we try not to get into that because it's over competitive and it keeps us busy doing work which may generate revenue in the short run, but doesn't really work out much. The orders which are a little bit more complicated, where some engineering work has to be done, that those are the orders which take little bit more time to mature and to be able to do those kind of businesses we have been adding over a period of time, and that is what is improving the margins. and that process still continues. Recently, we have also gone for some very specialized welding jobs for a customer in Pune, and which again is at a much better margins than our normal what we work at. So this is a continuous process, and as we technologically improve on some of these areas, it is adding to our margin. So we have operationally not had much benefit in the last 2 3 years. Turnovers have not gone up much, but margins have sort of been improving slowly and steadily. Your question, is it sustainable? I would say yes, it is sustainable. And I don't, yes, the challenge is there that you have to filter out and work for jobs which take a little bit time to fructify. There's also some engineering involved on the supply side, because customers give their finished requirement, but you have to do some engineering at your end to see how you will process it, what you will do. So the complexity of the jobs that we are trying to address is going better and better as we move forward. So I think it's definitely sustainable. And current capacity utilization, as we've talked about in the past, our capacity utilization has been quite poor at Pune and Vadodara, where we've been operating at around 50% capacity. But in this current year, both these plants have picked up and is doing better than last year, significantly better, I would say, in more in terms of profitability than in turnover. But turnover also, utilization has gone up by about 10%, but there's still good amount of additional capacity at both these plants. Um, as far as Bangalore plant is concerned, when we talked about this margin pressure, it is more in the short run, the next quarter, especially because we are doing the same similar jobs at both the plants. One place we are ramping down, and the other place we are starting up. So there is a duplication of work. That's the reason. In fact, even in this last quarter, for the results for which we have declared, our personnel cost to sale has been at an all-time high, because we've added more people and revenues have not got generated. But despite higher personnel cost, profit has still been a little bit better. So margin pressure is more this one quarter till some revenues start coming from that plant, additional revenue. Then that will ease off, and that I would say by first quarter of next year, that should be okay. Last quarter also there'll be revenue from this plant. So to that extent, our margins will come back towards normalcy in either in the fourth quarter of this year, or definitely in the first quarter of next year. As far as break-even is concerned, actually, uh, I am Ganesh. Do you have I mean, any calculation, or what was it about break-even point of that plant?
In terms of value, it would be 60 crore rupees, 5 crore rupees a month.
5 crore rupees a month, but that is including the existing business.
Yes,
Including
yes,
that. Yeah, yeah,
yes.
5 crores. Okay, right. Yeah, so that is that's about break even. And revenues, as we mentioned, as of today, what has happened is most of our energy has gone in only because even if we shift the same part from one plant to the other, you have to go through the whole process of approval of the new facility for every single part. So a lot of energy has gone into that. But parallelly, new articles are also being developed, but all the new articles now onwards are likely to come with a clause that they must be done on robots. This the proving out on robots has its own, I mean, time scale. All the robots are installed now. Fixturing is also done, and new part processing is also being done. Approvals are will yet have to start coming in, but that will also be in place by December. And the new part supplies also will start going in from January. The ramp up in that will come more after our paint shop is commissioned, because one of the bottlenecks today is the painting, because we are getting the painting done outside, and there is a limited scope of increasing the jobs outside because of quality concerns and other things, especially with regard to export. Customer is extremely strict about having all the work done within the same premises. So after the paint shop is commissioned, which is likely to be in the first quarter, after that, or no, rather the fourth quarter of this year, after that, the ramping up will be fairly rapid from this plant.
Okay, sir. So the new plant, will it lead to additional revenues, or is it that our existing operations would be shifted to the new plant, so it won't impact the revenues much, but just the margin profile?
No, it will. It will. So that's precisely what I was trying to convey. That is that the existing business has been shifted. Additional revenue will start coming in from January, and that will significantly go up from the first quarter of next year. Because by the time all the new part provings are done and paint shop is also in place, in fourth quarter of this year, there will be fresh additional revenue, and the first quarter of next year that will get ramped up because more additional export commitments and all those things will also start flowing out of that plant.
Okay, so I mean, on top of the current revenue that we are doing, which is running at 60% utilization, so we will, on top of that, add another additional 100 crores of top line potential. Is that a fair understanding?
Uh, uh, uh,
Or
no, see the potential for that particular plant we are talking about was something like 100 crores coming out of that plant over a period of next 2 3 years. Out of that, if we say that about 4 crores of 3.5 crores of business has moved from the old plant, so additional 6.5 crores revenue has to be generated from there, which will happen over the course of the next 2 years, which will take it to about 100 crores in a year.
okay, so what would be the total revenue potential, including everything after the commissioning, including new plant, the old plant?
So the revenue potential also is dependent a lot on because as I mentioned, the capacity utilization at Pune and Baroda is less, and Pune now is ramping up also quite nicely with more and more inquiries coming from primarily from overseas sources. So it that will depend a lot on how much those things fructify quickly. But that is a little bit it's not. I would say it's a little bit difficult to give right away in how quickly this will happen. But the potential for improvement, I mean, at both at Pune and Baroda combined is another, you can say, 4 crores a month in a year or year and a half's time.
Okay, sir. I mean, I don't want a timeline, but if you can just assume that if the plants are at 80% utilization, all the plants, so
Hmm.
what kind of revenues we can achieve hypothetically?
Uh, Ganesh, what would that be with Pune and Baroda being in place as well? The
including the new
yeah,
plant.
including the new plant. Yeah. At 80% utilization is
250 crore rupees.
okay, right.
All
Yeah,
right,
yeah.
got it. And sir, do
The challenge, in this is that in this kind of business is that you the time it is not that you are putting up an assembly line and then taking out production. So there are only certain numbers of parts which you can productionize over a period of a month. The whole timeline from the time you receive the drawing till the parts are proved and the first small batch is taken. It's a whole rigorous process which takes anywhere between 3 to 4 months. So this is the whole pipeline of business which is staggered. So over a period of time, continuously you are developing more new parts and adding them to your portfolio and going ahead. So significant amount of work there is has been done, but because all this has to be automated and supplied with robots, because now the customer, as far as Caterpillar is concerned, their focus is completely on they would prefer customers to have high levels of automation, and that's what is going to be our strength, because we are ahead of the curve as far as their entire supply chain is concerned. We have the highest level of automation in their entire supply chain from India. So that is going to help us to be able to sort of attract more business now, both for domestic as well as for exports.
got it, sir. So, sir, what kind of a top line and what kind of margins are you expecting for FY27?
Say the top line would be about 20% growth over this year, and margins also should be higher because of operational efficiency, because that is what has been holding us back. Otherwise, our value addition is quite good, but this additional turnover should help us to improve margins by anywhere between 1.5 to 2% at EBIT level.
All right, sir, got it.
Yeah.
Thank you very much.
Thanks, Gunit. Yeah, thank you very much. Okay, please go ahead.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Rahul Jain. Sir, you may unmute and introduce yourself.
Thanks for the opportunity. Good evening, Harshad Bhai and Ganesh. Nice to see the numbers which have come in. Of course, you mentioned that we have been flat on revenues roughly, or not much growth, but we have done quite well in terms of our margins, both on the gross and the EBITDA level. In fact, our gross margins and EBITDA margins both are at the highest level for last almost 3-4 years now, or almost 10 to 12 quarters. So since I was on the margins part, so this quarter we have reported about 49% gross margins. Previous quarter it was about 46.5. For last 4-5 quarters, 4 quarters we have been around somewhere between 47 and 49, with the latest quarter being at 49. So Arshad Bhai, as we go forward, this product mix which is coming, with this margin which has come in September quarter, is it due to certain product mix changes? And going forward, do we expect our gross margins to remain in this band of 47 to 50%, or can they be a bit higher with the new plant coming in? That is my first question.
Yeah. Okay. Yes. Yeah. Please go ahead. Anything else? Yeah.
Okay. My second question is, so just to clarify, you mentioned that about 30-35 crores of business which was being done from the existing Bangalore plant has been shifted to the new Bangalore plant, and I understand the revenues from that particular segment of the business has already started with Caterpillar. And in the previous calls, you had mentioned that about 2 things. One was the paint shop, which you will be starting in Q4. And then there were some specifications required by our client, which you mentioned in the previous call. I understand that was related to automation and robotics, which is almost complete now. So typically, can we assume that with regards to this new plant, Bangalore, now everything is in place, and the timelines in terms of commercial production starting from January 26. Hopefully now there should not be any delays, and the ramp up will be seen. Some kind of ramp up will be very much visible in the quarter four of the current year. That is my second question. Third is with regards to Caterpillar. You had mentioned in the previous call about the opportunities on mining and also with regards to the aftermarket opportunities, aftermarket for Caterpillar and also on the exports front. So if you can share some more details in case there are some further inquiries or some kind of forecast being given by both Caterpillar and some other customers for the coming times in regards to this particular aspect.
Right, got it. Yeah.
And last question, sir. Apart from Caterpillar, if you can share some details about some of the other customers like Schneider, Emerson, Volvo, Komatsu, and maybe some new customers which have been added. If you could share more details on that, whether we are getting some kind of feelers from there in terms of new business or the existing business ramp up or some new components which they are ready to give to us. I think one name I missed was Ingersoll also. So if you could share some details on customers apart from Caterpillar also. That was my last question.
Right. Got it. Thanks so much, Rahul. And I think you now is in a couple of incidentally, there is this XCon exhibition is going to be there in Bangalore, which is the main exhibition for construction equipment. And it's in the first week of December. And all the senior management of all these big companies, including Hitachi, Volvo, Caterpillar, all are going to be here. And a lot of activities going on in that front. So there's a lot of excitement about generally about earth moving, mining, road building equipment traction. But there one will get a better idea about really what is happening. As I mentioned in my initial statement also that customers are all ramping up now. They have given us indications that from January onwards, a significant improvement in offtake should be there, anywhere between 25 to 40% increase in volumes from the existing customers, including Volvo and couple of others also, who are all in this earth moving. So that has been little sluggish. Monsoon months anyway are little slow, and this year the monsoons just carried on and on and on all over the country. So it has been quite slow right up to October. Things had not picked up, but now they are all very optimistic. So all of them are making the right noises as far as their requirements are likely to be there for the future. Margin wise, I would say that even if we maintain margins at this level, it should be good. Last year, I mean, this quarter margins were better because of some product mix, especially at the Pune facility. And that has helped because if you will see from the quarterly the statement, the employee cost has gone up very significantly. Yeah, and as a percentage, it is about 2% of sales. It has gone up. And it's a little bit, as I mentioned, because of this additional cost of labor here, plus certain jobs, there was some additional cost which had to be incurred. But fortunately, because of better gross margins, in spite of that increase in cost, profit has been maintained. So I would say that at gross level, if these margins are there and we improve turnover, I would be fairly happy. And if it increases further, we don't know, but at least this much, if we maintain and improve turnover, should give us a very good, much better bottom line. On automation front, we have already installed about 6 robots at the facility. And as I mentioned earlier, for our kind of business, which is low volume, unlike the automotive sector, which has very high volume, similar type of parts, where automation is much easier to do. Ours are more complex, but since we had our own automation division, which we started and working with robots and other things. So we have managed to do a lot of work internally without relying on external support, and that has helped to absorb this whole automation knowledge within the country and set up a facility which is the best amongst any company in this particular segment. So and I was there, in fact, at Malur Bangalore plant just yesterday, and I was extremely happy to see all this a lot of installations, new installations working, and new articles being produced also. And we are very excited because a very senior management team of CAT, which is going to be in India at the time of XCon, they will be visiting our plant in early December. And the entire robotics division will be inaugurated by the very senior executive from CAT US. And so that is a very exciting thing for us. And that's what we are likely to do. So automation is a very important requirement for them. Not really so much for labor saving, but more for improvement in quality and repeatability. And we are on track for that. All the installations are in place, and new products are also being proved now. Every sort of every week, something new is happening, and teams from different divisions of Caterpillar and our people are working very closely to see that it is on track, because they are also very keen that we ramp up quickly so that we can supply them both in India as well as overseas. Uh, yeah, with regard to mining and aftermarket, their aftermarket business is that market that we are sort of supplying from Pune facilities, and that is a very large opportunity. And there, it is up to us how much we can grab. The challenge is more from our side than from theirs. They can go even 4 or 5 times higher than what we are currently doing. The challenge there is that in the aftermarket, by design, as you would know, the batches are much smaller. You are not producing for actual online production over a period of time. So large variety of components and very small batches. So the pro out and the all these things, and getting it the first time to get it done, the more and more parts are added, that takes little time. But aftermarket is sales are ramping up quite fast, and we have to, of course, we have to do much more work at our end and do more automation, similar like Bangalore, even at Pune facilities, so that we can cater to that market much better. On the mining front, I think somehow in India, their mining equipment has not yet picked up the way it was expected so far, and they are also giving indication that it may happen only in from first quarter of next year. As far as exports are concerned, also parts are going for mining equipment, but little bit there because of these tariffs and other things, there are some concerns. I mean, both they are very confident, and I am also very confident that this tariff issue is likely to be resolved any day now, and their tariffs are likely to come down to about anywhere between 15 to 20%. On that assumption, we are all moving forward. And if that sort of happens, the export side for mining equipment should start picking up significantly after that. As far as uh, you talked about, yeah, other customers. Unfortunately, some of the other customers out of Gujarat plant, whether it is Schneider or Ingersoll Rand, both are not really firing that well. They are Whatever there, in fact, Schneider especially was to have this year very record. They are in a very good space also because, as you know, in electrical sector, transformer and the switchgear segment for distribution is really booming. And they are also in the right space, but I think they seem to have some internal issues. They have also doubled their in capacity, but their lifting has not yet picked up to that extent. And they are also been keeping on postponing the additional volumes, which were to have ramped up by this third quarter of this year. But it's still looking a little bit iffy. And I'm not really clear what seems to be the problem. But their ramp up has not happened the way it was expected. Ingersoll Rand has recently just commissioned a new plant in Sanand. It was just about a few weeks back. That was also quite delayed. And with that, they are going to sort of rationalize their product range. So the smaller compressors, all that will remain at the existing facilities, and the bigger ones which go into big steel plants and other big where the margins are much better, that will move to the new facility, and they'll be able to ramp up significantly. So going forward next year, I think Ingersoll Rand should have a very good growth coming from there once their new plant comes. I mean, it started, it's just inaugurated, but still work is. It's not yet really fully yet operational. I think they are just a little bit going slow. I don't know why, but next year onwards, they should be able to ramp up quite well. I missed out something, Rahul. What was that?
No, I think so
Hmm?
basically Emerson and Volvo.
Yeah. So Volvo is ramping up very significantly. They are bringing new models into the country, and so they are. Yesterday during my Bangalore visit, last 2 days, I was also at Volvo facility. So they are also talking of much better volumes out of India. Emerson, in between they were slightly slow, but now Emerson and two or three other customers at Pune, all the export customers, new customers have been added, and those businesses are sort of likely to pick up also going forward. And Also at Bomsundra plant, we were not adding, we could not rather add other customers in because we were already fully occupied at that plant. So now that that capacity has been vacated, so we are onboarding, something like two customers a month, and some businesses have started either in EV segment and some other food processing equipment, and some customers have been added. All these are MNCs. And those businesses also should pick up quite a lot. Actually, this downturn, or I would not say downturn, but sluggishness in the yellow goods market over the last 5-6 months has held back the southern business, whereas other businesses have been fairly okay. So now once this yellow goods start coming back on stream from this next quarter, I think businesses should definitely start looking up.
That's so nice to hear, Arshad bhai. And I understand. So typically, with this new plant coming up and starting commercials in a quarter or so, uh, I think we are at an inflection point. Is that a right way to look at it?
I think so. Yes. We are actually it is little late. It took much longer to do this whole process of shifting as well as automation. But when I benchmarked, or later on when I started looking at how the automotive companies were going about it, I found that even even in large companies, these kind of projects are taking, something like 6 months for it to get commissioned and on stream. So this proving out process is a little bit long. But we are now at the end of the tunnel. So yes, I would definitely think we are at an inflection point, and we should be able to do really good business going forward.
So nice. Thanks, Harshad bhai, and thanks, Ganesh bhai.
Hmm.
Thanks for the insights.
Thanks, Rahul. Yeah.
Just a quick reminder for everyone, if you have question, please raise your hand using the reaction tab. Also, one can ask question in the Q&A box. Next, we have Mr. Dwanil Desai. Sir, you may unmute and introduce yourself.
Hi, good afternoon, Harshad bhai and Ganesh sir. Am I audible?
Yes, please. Yes.
Yes. Yeah. So Harshad bhai, first of all, congratulations for starting the new plant and starting the ramp up. So my first question is more of a clarification. But if I understand correctly, our old Boomsendra plant was doing around 70-80 crore of revenue, and new plant, at full utilization, as and when it happens, will do around 100 crore. So is this understanding correct? And secondly, a question related to that, as we move existing cat products to the new plant, how do we see the utilization of Boomsendra plant again coming back to that 80-90% that we used to do? What will it take for us to reach that level, time frame, customer addition? If you can talk more on that. Sir, second question is on the new plant. I think paint shop, as you rightly said, has been delayed for various reasons, and we are now expecting that it will start from Q4 onwards. So, sir, how do we how confident we are that from Q4 onwards, the paint shop, will start and there won't be any further delay? Because I think in our earlier interaction, you had indicated that for larger parts, to kind of, get through and start ramp up, we need paint shop in place. Do we see that happening in Q4, or there may be a possibility of further delay in paint shop? And on the once the paint shop is operational, in terms of product approval process, will there be a lag between, when the paint shop is operational and the ramp up of the new larger parts, because those will be the new parts. So the first article and the entire process that you guys go through with CAT, will it take time or will it be a simultaneous process? And question related to that is that, next year, should we see at least incremental 20-30% business other than what we have moved from Boomsendra plant coming from the new plant? That is my second question. And third question, sir, is actually, on the Gujarat plant, we have been talking about that we are looking for some kind of a retail sales to fill up the capacity, even though it may come at a lower margin. So, any progress on that front, if you can elaborate.
Yeah. Yeah. Thanks, Dwanil. Yeah. So, yeah, as far as what you talked about, the capacity, though we were doing something like 60 crores or so from Bomsandra plant, but that was under a lot of strain, and that plant is not really that is not the right. It is actually was running at even beyond capacity. That's why it was overcrowded, and there were some issues. Customers were also not satisfied that from the angle of safety and from angle of flow of the material, etc. So I would say that the existing Bangalore facility, the old one, should I mean we should keep that capacity as something like 48 to 50 crores. About 4 crores a month is what it should be able to run in a nice and a proper manner. And the new plant, which is something like three times bigger than that, If we just directly extrapolate 3 times, it comes to about 120 crores. But we feel that 100 crores is what we are initially thinking in terms of that. But with painting and all that being done in-house, if things move smoothly and orders ramp up, obviously over a period of time, it could cross that also. So capacity-wise, we can say that between both the Bangalore plants, you're talking in terms of something like 150 crores if they are operating at 80% capacity. Now, how quickly we reach that is the major sort of challenge. So at the Bomsondra plant, as I just mentioned in the previous answer also, that we are onboarding customers now, and we feel that we should be able to reach those the capacity levels, earlier capacity. Say now with this movement out from here of CAT business, that factory would be running at something like 40 to 50, 45% capacity. The balance capacity, we hope to get it filled up in within the next year. So that and the new factory, both combined, should give us a growth of 25% at least in the south as compared to before. South, not including Chennai, but I'm just talking of Bangalore itself. A paint shop, the biggest, highest amount. I mean, two things took a lot of time. One was the signing off on what kind of paint shop is required, because this was all being tailor made to see that not only we set up facilities for existing work being done, but also for the kind of work which may flow in the future. And the future work is we had to take a little bit broader view, and we are also talking in categories and parts which currently we are not in those categories at all. Little bit medium fab. Today, our 80% of the business coming from them is all light fab. Now we want to move into medium fab, so the size and the weight of the parts will be much higher. So the paint shop design and signing off by customer took little bit time. And the larger amount of time actually after that was unfortunately the government approval, because these paint facilities, once you put it is coming in a red category under the pollution control laws. And that permission has unfortunately got it was very much delayed, and that's the reason. And we did not want to place orders for equipment without permission being in place, because once you order equipment, and if the authorities make you change the design or the layout or anything, then you could get stuck. So we could not order for the equipment till all this happened. But this is all done now. The entire system orders have been placed, and it will come in two phases. So some of the deliveries of parts and all that have started coming this month itself, and it will come into the factory, and it will be implemented in two phases. First, the smaller size paint shop will be put up where the existing parts, which today we are sending either to old factory to paint or to outside sources, that will be first internalized. And then the larger paint shop, which includes some additional advanced facilities for particular different kind of coatings and those things, those also will get implemented little later. So I think now I don't see much of delays happening on that front. But yes, that has been a major sort of bottleneck in us being able to do more work. As far as domestic, work with CAT, even we could outsource some painting, and that was not such a big challenge. But for exports and for the heavy fab or medium fab, without paint shop, we'll not be able to really execute. So even some of the bigger items now, which are being automated on robots, those painting also those will get it proven prior to the painting. Once the paint shop is there, yes, we'll have to go through the process of getting the painting part also approved. But again, that should be about 4 weeks. Immediately, as soon as the paint shop is ready, we should be able to start working on that parallelly. So from next year, that's why I said that first quarter of next year, our ramp up should be quite very, very fast. I don't see now most of the challenges are behind us. There were two major ones. One was automation with robots. Second was painting. So robots, of course, everything is in place. Trials have also gone very well. And I was also very happy to see, I mean, so many robots and automation working yesterday on all trial parts and all that. So delays are now behind us. Now we have to start actually doing commercial production and getting it out actually now. Coming to yeah, the retail business of Gujarat, which I have been talking for quite some time, the that is going to be a complete online kind of buying portal. So that will be the customers will be buying cut and bend parts directly by feeding drawings onto the website, getting quotation online and ordering online. Everything, the entire transaction will be run on a portal-based kind of thing. And so this is a very, I mean, there's a lot of work went into the software part of it, the back end processing and how the immediate quotation will come based on drawings and the production planning, inventory, all this. Even our equipment, unfortunately, some of the equipments were delayed there, but the real bottlenecks were more on the software implementation. But we have started trials. I mean, all these trial orders are being executed now, and by another 15 days or so, we will come online with full-fledged online portal ordering. So that also will get on stream. We are also participating in a couple of very big exhibitions. Now the next one in December in Gandhinagar and January in Bangalore, where also we will use those platforms to get this ordering platform online. And initially we have to get some traffic onto the website. But after that, the kind of ease of ordering, the speed with which we will deliver, it will be absolutely a delight for the buyer. So it's just a question of getting there, because this is the first time for this kind of product where portal ordering is being done. This is quite common in Europe and United States, but in India, as far as I know, this would be a first of its kind which we'll be doing. And in the long run, I feel that this is how the business over a period of next 5, 7, 10 years, lot of business in the country will start moving towards this kind of buying. Because if you would have noticed, a lot of different industries, a lot of startups are coming to help people how to order online. In fact, even now there are startups which are helping companies, MSME companies, to buy even raw material steel instead of directly talking to the steel mill. There will be these portals which will help you to get your orders streamlined and all that. So this business, the software side was a little challenging, but it's all in place now. The beta testing is also done. Some orders are being executed with known customers, and we'll go fully live in another month's time. In December, we'll be going live, and hopefully after that, that business should start flowing in.
Okay. Sir, two small questions follow up. One, sir, for this year, FY26, I think, should we assume 10-12% kind of a growth given that most of the ramp up will happen from Q1 next year? That is one. And second, sir, for Pune, if we need to serve the aftermarket parts of Caterpillar to a significant extent, do we need a paint shop and are we doing something about that?
Good, very good question. Yes, absolutely. We need a paint shop, and that also. Ganesh, has the paint shop that permission come in at Pune for
The,
Pune?
the permission, the first permission, that is CFE, consent for establishment, has come.
Yeah. Okay. Yeah.
But
So.
we haven't placed order for equipment as yet.
Right. So, to answer your question, yes, we will need painting facilities, and we have to put it up. If we want to ramp up that business properly, we'll also need a painting facility, and that is going to be the major thing which we have to get in house. Because today sending it out for painting, customer is there is a lot of sort of resistance about that. We have to send it to our maybe the Bangalore plant sometimes, and then export it from there, or get it back here, or there are a lot of other bottlenecks. So yes, for aftermarket, that is going to be important. And so these permissions come in two stage. One is permission to allow you to set the paint shop, and second is after you set it up, their approval for you to run it, so that there is no pollution and all that. So the facilities are all being put up, which are going to be compliant only. We are getting it from proper sources and suppliers. Yes, that will have to be done to ramp up that business. Then there again, as I said, if we can do, we not if we, but we must also have to invest little bit in automation, so that we can do much more volume with high variety, without having too many more people in the system. So both these things will have to be done very, and then that business should be, that is the aftermarket business. The advantage is the margins are higher because volumes are low, and second is that business is not cyclical really, because there's huge population of the machines in the market. So unlike the main business of the earth moving industry, which is very cyclical, so and they have very deep cycles, and this aftermarket business is very steady, because that goes on irrespective of what the main business is. So that's how we are. So we'll have to address that.
Yeah. So that FY26, should we look at 10%,
Yes.
10,
Oh,
12%?
Yes. I think it should be, yes, it'll be over 10%. And with only this maybe the third quarter slightly dip in margins, but fourth quarter onwards, again, margin also should be back on stream. So yes, we can see that much growth. And as I
Wish you
mentioned,
all the best.
because the steel prices in the current year are lower than last year, so to that extent, your sales reflect slightly lower. Even though the volume is higher, the rupee value is it's a deflated value actually. So that is probably, that is also the reason maybe the margin also looks slightly better, because the sale, if it was at the old selling prices of higher steel, the sales would have been higher actually.
Very useful, sir. Wish you all the best. Thank you.
Thanks so much. Thank you.
Just a quick reminder for everyone, if you have question, please raise your hand using the reaction tab. Also, one can post their question in the Q&A box. Next, we have Mr. Rahul Singhania. Sir, you may unmute and introduce yourself.
Yeah, hi.
Yeah, hello. Yeah. Yeah, please go ahead. Hello. Hello.
Can you hear me, sir?
I can hear you now.
Yeah,
Yes,
yeah.
please go ahead. Yeah.
Sorry, I was on mute. So the Bangalore facility will be fully ramped up in 3 years according to the projection. So how can we make sure that volume demand will match the additional capacity, especially as you mentioned, when construction machinery demand is cyclical?
Right. Yeah. Anything else?
Yes, so one more thing I wanted to ask that we have diversification across 6 plants and 70 odd welders or so,
Right.
but this has not yet translated into market leadership or a significantly larger revenue base. So, what has changed now to accelerate trajectory?
Right. So, as far as capacity, how to see that capacity gets utilized? Actually, in the commodity cycle is turning up, and so worldwide there is a very good expected demand for mining equipments and all these things. So that is the reason customers are very optimistic. Our customers are quite optimistic about demand in India also. I am not very sure, how that is going to pan out because, India, the last decade's experience has been that it's always been up and down, up and down. It has not been very consistent, actually. Demand has been definitely gone up, but it goes up for a year or 2 years, and then again there is a lull when you change the cycle from BS4 to BS5 and some transitioning happens and all these things. So Indian demand is going to depend quite a lot on the government spending on infra, on roads and all these things. So if that continues the way it has happened in the last 2 years, then I think domestic demand should continue. But my feeling is that for us to be able to fill up our capacities at Bangalore, we'll definitely have to get a good amount of orders from outside India. It's only then only domestic market will. I don't see us being able to fill up that factory with domestic demand. So we'll have to start working more and more with one is of course with Caterpillar, who's our number one customer, and we are already supplying directly also to their plants in the US. And earlier we started with one plant. Now we have three different plants where we supply to, and so that is the main anchor customer. But they will definitely have to look at other customers as well to be able to fill up that. So that is going to be very critical for us. But my confidence stems from the level that earlier we were hampered because of infrastructure within the company, the space and other things. Now that we have a good amount of infrastructure plus a high level of automation that we are doing, our capabilities, if we are able to work with Caterpillar, which is the number one company in its space in the whole world, and that has raised the company's capabilities to a very different level. So that is the reason it gives me little confidence that we should be able to work with other customers as well and fill this capacity. So I mean, bottom line is that we will need business from overseas to be able to fill up this capacity. But I don't think domestic demand will be enough to take up this much additional business. The that was about capacity and cyclical. Sorry, I missed out your second question, Rahul. Can you please repeat
Mm,
that?
yeah, yeah. So our diversification has not yet translated into market leadership
Right,
or a larger revenue base.
right, right. True. It's very accurate. Actually, what has happened is that we had a leadership position in the industry, from 2003 to 2012. We had a very good position in the industry, but after we ran into a lot of problems because of overcapacity and financial issues, etc. So we were sort of not in the market in various areas, and so after we have come back in which has happened very recently over the last 3 years, is when we are again trying to regain our space in the market. And now by design, we are not going in for a very high turnover kind of businesses. So we are looking at more and more a little bit challenging jobs where it takes a little bit more time, but you get better realizations, and those jobs are also more sticky. So this could involve when we come to welding now, for example. We were earlier mostly about 90% plus work was all carbon steel. Now we are doing more work with stainless steel. We are also starting to work with aluminum in the EV space. And we recently have started talking to L&T for working welding with Inconel materials also. So we are doing on the welding side two things. One is automation. Second, so we want to automate more and more welding so we can get better quality and repeatability. Second is that we also have now some consultants in place who are helping us to get into a little bit more challenging areas of welding and improve. So our position is improving year by year. But yes, we will not be, our turnovers are not, I mean, we will not be in a space where, we will ramp up even in the yellow goods, to something like 300, 400 crores, which also is an opportunity, which is being addressed actually by some of the other players in the industry. But that is not, I mean, that boat has sailed actually as far as we are concerned. So we are not doing many of the parts like buckets and some of the low value added parts in the earth moving industry. But as against that, we recently also added one customer in Pune, an American company which is making some road making equipment, which required, sorry, it's a German company, which for the first time they are making those components outside of Germany because those machines were being made for India. And now our first part for that equipment is also being sent to Germany for trials. And if that gets approved, we'll export the same part to Germany as well. So these are the kind of projects on which we are trying to focus much more. So those things generate, turnover, annual turnovers of anywhere between, 3 to 5 crores. But they are very sticky in terms of, continuous business. And once the original challenge of getting the quality and all those things approved, they give you much better margins, and they are much more sticky. So that is the kind of path we want to follow, and I think that is working out okay. One more area which we used to be very strong was in the metros, and that place again where we had vacated. We are again trying to sort of strengthen our position there. As of today, we are doing very small amount of work in that space of metros and railways. But now we want to try and work little harder to see whether we can get some new sort of items from there which are little complicated to produce and make. And so that's the area, another new area which we are working on. So we are trying to go in a little different manner, and that is definitely going to work. One another good development is that Europe has now become very expensive to manufacture anything. So they are all struggling, to find ways to get out of there and get stuff made outside, either to transfer the whole manufacturing or to source components. So that is where a very large opportunities. It's not easy to get it done, but there is a very big opportunity there, which we have to sort of become a little bit more aggressive in addressing, and that should be help us to sort of give us good business at good margins also.
Thanks for giving such detailed answers, sir. This gives a very clear picture of the company.
Yeah.
I wish you best of the luck for the future.
Thank you so much, Rahul. You're very much appreciated.
Thank you, sir.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can request their question in the Q&A box. Next, we have Mr. Dipen Shah. So you may unmute and introduce yourself.
Yeah, thank you for the opportunity. Harshad bhai, a good set of numbers given the circumstances. I am actually seeing the company, started seeing the company recently, and I had a couple of basic questions. Just wanted to understand, sir, is there a concept of an order book kind of a thing in our business? If yes, what could be the order book like? The second question is that what is the longevity of a particular contract, in the sense that whenever a contract comes through, does it take 1 month, 3 months, or slightly longer? So that could give us some idea about the visibility which you have for the business. And the third question is that during the current quarter, did you have any impact of the tariff issues? And if the tariffs were to go down, would that be a source of some better margins in the next quarter, or in the year, in the quarters after that? Thank you so much, Harshad bhai.
Yeah. Yeah, thanks very much, Dipen. So, see, in our case, order book. So there are two types. Our major business is, you can say, is kind of supply to OEM. So it is
Yes.
most of it is repetitive business. So once
Mm.
you have some articles which you have started supplying, then you will continue to supply those items, and your business will depend on the volumes of your customer. So if his sales go up, your volumes will go up.
Mm.
And the other way is that maybe your share in the business, because most of the customers want more than one vendor. So typically for any article, there would be two or sometimes even three vendors supplying.
Mm.
So if your quality, delivery performance, etc., is better than the other parties, you can get a more share of business. So the two ways to look at it is, one is your share of business from the customers. Second is those the so order book as such, we don't have a value order book, but typically for each customer we have an idea that that okay, this customer, if he runs at a certain, I mean, their run rate is, let's say, for example, 50 lakhs a month is what they are picking up. If their volume ramps up by 10%, that 50 could go to 55 lakhs or whatever. Or if it goes down, it could go down to 40 lakhs. So this, and within the year, there will be some ups and downs of months, because these being all parts of capital goods, it is a little bit lumpy also sometimes. It is
Mm-hmm.
not like automobile, where every year, every month, so many cars are going to be produced, or motorcycles are going to be produced. So
Mm.
of course, in earth moving equipment, there is a little bit more regularity. But in other types of equipments which are going to OEM, which could be for companies, any other engineering companies, Sulzer
Mm.
or windmill
Mm.
companies, or so many other companies, though it is always going to be dependent on their volumes. Business is very sticky in this industry, because it is too much of a pain for a customer to change his supplier, because
Sure.
they have to go through a lot of headache. So unless you really goof up with a company on quality or on some other parameter, by and large, customers tend to stick with you. To get into the company is a little difficult, but once you get in and you are smoothly delivering to your customer, they do tend to sort of stick around with you. It is somebody cannot just come and say that, oh, I will give you this, I have a new factory, or I have better facilities, or I'll give you 10% cheaper. A buyer is not going to, he may use that as a stick to, try to pressure you into price reduction, but he's not likely to sort of move away from you. So business is fairly sticky in the industry, which is a good thing. And because there are other things also, because these are all tailor-made items, you have to invest a little bit in tooling, fixturing, certain process require some specific tools for that particular order. So once you invest in that, many times the customer pays you extra for that investment. So he also wants you to sort of continue to work on that. So after you get in, it is quite good. The other part, which is quite interesting actually, is you talked about how the business increases or longevity. Actually, what happens is that as and when customer wants some new, either their design changes or some new model comes in, so he has a chance. They will give the drawing. Obviously, he would prefer to give the new parts to an existing supplier who's satisfying him the best, where he has the most confidence that this is the guy who can sort of give me this. But there the challenge comes that how quickly you can develop the first article. So once you get the drawing, from the RFQ stage to the first article production, then to get it approved, and then a small batch is sent, that gets approved, and then you come into commercial supplies. So your speed of reaction, right from the time the first drawing comes to you till you are able to do that, that is the sort of trick to be more successful. And that involves having a proper team, a design engineering team in your company. And that has been traditionally a big challenge for everybody in the industry, because you need people who understand all these 3D drawings, and then you unfold it, you do some engineering work with that. We have done a good amount of work in the last 1.5, 2 years. We invested in, very high-end softwares, and we are still continuing to invest more in software, which will help us to do all this first part of the work quite a lot. So that, of course, is hardly ever discussed as a capex or whatever, but that back office work is very, very critical to get it successful, for you to get deliver the first article properly. That, and the second part is the human resource, the quality of people who are working. Your equipments are all very high end, they are all automatic, CNC, etc. But the person who is running that equipment also should have some sort of knowledge about what he is doing. And that is another very challenging aspect of the business. So we have been working very hard on that front over the last maybe 18 months, and continue to do so. So, two ways. One is investing in software, training people on that. And at least I think we would have spent close to 1 crore of rupees on this, on the various softwares licenses at different plants. And second part is on the human capital side. We have now a full-fledged training center in the company, where we train our staff. A training officer at a fairly senior level, he's full time there to train and upgrade the quality of staff, so that they are able to do the work properly and get it out. Because though it may look that these are automatic, highly automatic machines, you just have to press a button and things happen. But since ours is not a repetitive high volume business, every time you are doing something different, some even a small changes are made in drawings, it requires some kind of work to be done on the shop floor and all that. So we are investing quite a lot on the back end side of the business. And that is the harder part of the easier part is to put up the machines and put up a factory. But the people area and this software, that was proving to be more challenging. But we have done a good significant work, and that has also definitely helped in improving our volumes, because now our time from which you receive an inquiry to the time you are able to give a quote, or to able to give the first article, that has been shortened. and customer is looking to reduce that cycle time even further, because even just yesterday in my meeting at Volvo, the head of purchase, he told that only that in India we are giving you 8 weeks to do this, whereas in China we get it done in 2 weeks. So why can't you all bring it down to 4 weeks? And he was absolutely right in demanding this. So I think those challenges we have to address, and that will improve customer satisfaction to a great extent, and then the business will flow more. And there also we are on track. Especially a very good amount of good work has been done at Pune facilities on this front, and that is what is giving better sort of response to especially the foreign customers are much more demanding, because typically in India, we are over busy doing things and we don't quickly respond. We don't give even the quotation sometimes takes 7 days to give, because so much of drawings have to be read. So that there we are investing in automation, software, all these things. So that part is also helping to sort of improve the pipeline of the more RFQs you are able to handle, the more business you'll be able to do. So that part we have worked quite a lot on that, and it's giving very good result. Coming to tariff, actually tariff has not impacted us in any way directly. Means any orders which were in place have not been affected, but additional business which was being targeted is slightly. I mean, again, there all the engineering side work, approvals, all that is going on. But the business is not likely. I mean, business may get hampered if the tariff is not reduced. So we tariff reduction is going to be little important for us also going forward. But most all the indications I'm getting from overseas as well as in India is that this will happen very, very quickly. I mean, in a very short period of time. And you would have seen that even Reliance has just announced that they'll stop using any Russian oil for the refinery. So India is taking all the steps to see that the great Donald is very satisfied and he reduces the tariff on India. So that's about tariffs, Dipen.
Dipen sir, if you are trying to speak, you are on mute.
Yeah, sorry. Sir, thank you so much for your detailed reply and all the very best to you, sir.
Thank you, Dipen. Yeah.
Just a quick reminder for everyone, if you have question, please, I'm sorry. Just a quick reminder for everyone, if you have question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. We believe there are no further questions from anyone. Would like to hand over the call to Mr. Rajneesh for the Q&A box.
Yeah, so we have few questions in the chat box. We'll go one by one, sir. So we have a couple of questions from Mr. Grish. What is your order book currently? What steps are we taking to boost exports? And do we see any big exports market? What is the biggest market in exports? Second question from Mr. Grish is, could you elaborate about the journey of automation and how it would add to a top line and bottom line? Harshad sir, over to you.
Yeah. So, as I mentioned earlier, order book is, I mean, suppose, I mean, say today our current monthly run rate is something like 13 crores. So, visibility is anywhere, I mean, around 14, 15 crores is the kind of monthly sort of call-offs which come from the companies, and then some of them towards the end of the month say, oh, we don't want it this month, you go into the next month, etc. So for us to have higher turnover, that's the number that we have to increase. And so more orders coming into pipeline, partly from existing customers and partly from new customers. we have been a little bit weak in adding more new customers. That has been a slight area of concern over the last few years. But now I think this year we have added more new customers, and many of them have very good business look going forward. Some of these customers are existing, they are doing that work in-house and they want to outsource it now because they feel that this is not their core area of strength and expertise. So they are moving it out. These involve some special kinds of welding and other things. So those kind of things are helping us to get more orders into the order pipeline funnel. Exports, I would say that the highest potential for exports, in my opinion, would be Europe because Europe has become extremely costly, and they are really struggling now to sort of produce things there. And of course, many factories are shutting down also because of high costs. So it is Europe where I feel, of course, this cuts both ways because if those factories become unviable, the customer's factory and closes down, to that extent, that business is gone. That customer is no longer alive, and either Chinese have eaten up the business or some other country has. But to the extent customers who are sort of carrying on, they are all looking to sort of outsource. Highest, I would put it. Western Europe has is very sort of keen to look at. But we have inquiries coming from all over the world, including Australia and United States as well. And some of these companies also are setting up buying offices in India, and they typically start off with castings, forgings, and all that, which India is already fairly strong and well placed, and then they come on to the fabricated items because fabrication items, the proving time and the amount of work that is involved is much more. And so they typically come in a little bit, come into the orders a little later. But that is happening as we speak, and it should continue to increase according to me. But it has been a little longer journey there also than what we expected. But it's moving on the right track. Automation is an area which is very dear to me, and we, I mean, absolutely are on an attack mode and ahead of the curve in the sense that because custom, I personally feel that if we focus too much on immediate ROI, that till I prove that automation is going to be cheaper than doing it manually, what happens is that you sometimes are not able to give the kind of quality, repeatability, or timely delivery because of problems of human resource. So my thinking and strategy is that you should automate right away as fast as possible and ensure that your quality and delivery is good so that business will flow. It is the other way around. If you automate, you'll be able to get more business rather than thinking that if I get more business, I will automate. In my opinion, it's the other way around. And I think that is where India, I mean, as a nation, what I am finding is that people have been little bit slow in going for automation. As I had discussed earlier, also we have started this automation division about maybe a year ago, 9 months, and last 3 4 months we are getting good traction. We have started selling now robots and cobots fairly regularly. Every month we have some orders now coming in, and we are seeing good amount of traction. Next year, I expect even automation business to pick up, and hopefully, if the way I see trends moving, we could even be doing about 10 crores of even sales of automation products to other companies. And in-house, of course, wherever automation is possible on welding and on surface finishing, other areas, we are installing robots every month. One or two robots are being installed. So my hope is that large part of our welding we will move towards on the automation side. And that is it has taken a little bit time initially, but now it is moving very, very fast. So I mean, we have now our new Bangalore plant is really state of the art in that. It's state of the art, of course, is a cliche, but I would still like to say that in this case it is true. So yes, automation within the company is moving very fast, and we also are looking to make it as a good new vertical of business, even for outsiders. So I think that's about automation.
Okay, sir. Hope Giriji, your question has been answered. Next question we have from Mr. Pranav Mishra. Steel fabrication is a working capital heavy business. Could you quantify any increase in inventory days and receivables days post expansion? How tight is liquidity currently? Second question, you highlight presence across industries like railways, T&D, construction, etc. But which one segment is still driving majority of the growth? What happens if infra railway orders slow down? Third question, tube segment's entry is recent. What is incremental margin profile versus legacy sheet metal? When will this contribute more than 10% of revenues and how we see in upcoming future? Harshad sir, over to you.
Yeah, so you're right. Working capital cycle is could be an area of concern in our kind of business, because you buy raw material on cash immediate payment, and you sell on credit anywhere between 45 to 90 days. But our working capital is, I would say, the best in the entire industry, and you will not find a company with such a low working capital fund deployment in the entire industry. And I think this has more happened due to the when we passed through a very severe finance crunch. We started, I mean, by design, we could not do business wherever the working capital blockage was more, where either the credit was more and stuff like that. So automatically, the whole way of addressing the business became that our working capital, cycle should be very small, and that is why even with a business of about 150 crores, we have a working capital CC limit of just about 3-4 crores, which typically for any other company would be anywhere between 20-25 crores. So we discount, we get our sales converted to revenue by customer discounting the bills in their facility, or our inventory management also is very tight, because the flow through the factory, our WIP, the speed of movement of the material in the factory is again the best in class in the entire industry. So working capital management, I think our CFO or CEO, Mr. Ganesh Agarwal, has done an absolute miracle for the company, and that is could be one of the area of strength. As far as concentration of business is concerned, today more than 50% of the business, I would say maybe close to 60% of the business, is coming from yellow goods sector, which is, by yellow goods we mean earth moving, mining, road making equipment, construction machinery, and that whole sector. So yes, we are overexposed to that particular area, and if there is a major sort of slump in infrastructure spending, definitely that could impact business. But just now, I would say that virtually or most of our customers are on growth mode, so they are not seeing any slowdown in the immediate near future. So I don't think. I think it's a good thing to be in that area of business, and everybody is in a quite an optimistic mood just now. So hopefully that should be that should sort of that is not a risk in the short term, according to me. As far as tube business is concerned, unfortunately, we have sort of been struggling to get get the right breakthroughs. It's a very small business as of today, and we are only sort of supplying very high-end, very small quantity batches of these products to the existing customers in the yellow goods space. But that doesn't generate enough revenue. We have to be in a more commoditized kind of tubular product businesses also, which will be coming from the automotive industry or the furniture and the consumer goods kind of space, where we are still working to get the right breakthrough. But there, if you see, if you are following, the steel consumption, the fastest growing segment in the steel area is in the tube section. So tube production in the country is growing much faster than the overall steel production. So all those tubes, unfortunately, a large part of those tubes are being exported without being processed. So my optimism of that business was stemming from the macro picture, but we have yet to we have all the technology in place, very high end kind of processing machines, but we have not yet made a right breakthrough in that area. I am quite optimistic that in coming year that breakthrough it can happen any time now, but we have to make that breakthrough and make it happen, which would then be able to take it to a 10%, as you mentioned. When would it be? If after we get one breakthrough, I would feel that we can scale it up fairly quickly. That should not be much of a problem. But the right breakthroughs are not yet in place. That's about the tube business.
Hope Pranabji, your question has been answered. Next, we have Mr. Jayesh Shah. We have a couple of questions from him. The new Bangalore plant requires rupees 15 crore capex and is expected to add 100 crore over 4 years. What are the current utilization levels, and by when do you expect the facility to become EBITDA processed, one giving the initial profitability? Second question, you mentioned enhancing export capabilities. So, what percent of revenue currently comes from exports, and why has this not scaled meaningfully despite multi-location presence? Harshad sir, over to you.
Yeah, yeah. Regarding new facility, I think we've already addressed it from various angles of what is the business potential, etc. in the earlier question. So mainly it is with regard to exports. Ganesh, can you sort of give some feel of the numbers of export, current numbers, and how that would move?
Port number two?
Yeah, export, yeah.
No, export the from entire company we are talking about?
Yeah, I would think so. Yes, entire company. Yes.
Yes,
No,
sir.
yeah, it's moving in the right direction, and there's a lot of potential. Talking to 3-4 new customers as of now, so I think that business is going in the right direction, and I see a lot of potential in that sector going forward.
Yeah. So from current number to, I mean, what could be from current number where to where, what could be? I think that would possibly be what Jayesh was trying to ask.
Sir, if you means to answer this question, in Q2 we did 6 crore rupees of this thing export.
Export,
Yeah.
right.
So yeah, we can extrapolate that in that, and if this 3-4 customers who we are talking to right now, if those customers that business materializes, then I think there would be a 20, 25, 30% jump in that minimum.
So, yeah. So in export, I will only add one more thing, that many of these companies are talking very large business. So initially they may sort of start with, just, maybe a small $100,000 kind of thing. But they are giving indications that if some of these things fall in place, it could be very large business. And some of these items that we are looking at are from very different industries which we have not worked with in the past also. So those are the kind of inquiries which are coming. And what we've now done is that earlier we were trying to restrict the kind of jobs we were looking at, but now we have broadened the portfolio. So, for example, even if there are certain parts of those projects which are with not outside our scope, we are trying to look at it that how can we sort of outsource some of the things, or we can collaborate with some other companies in India and then source it and then supply to the customer. So we are also broadening our way of looking at the export business as a whole, and that is what is helping us to get a more broader sort of range of inquiries, which we have to, and that is again a little lumpy business. So if some of these click, it could be a fairly big. I mean, a single customer could be talking in terms of anywhere between 10 to 20 crores of business. That's the kind of business that can flow from even a single customer.
Hope Jayesh, your question has been answered. Next, we have Mr. Anshul Jain. You are now entering a scale-up phase with automation, new segments, and export ambition. Do we have the right professional leadership layer, chief operating officer, business heads to accelerate the growth? Over three decades, the company has been led largely by the same leadership team. What is the formal succession plan to ensure continuity, fresh strategic thinking, and institutionalization of growth beyond founder-driven execution? Third question. With defense, renewables, and export supply chain shift accelerating, which new industries, vertical example, aerospace, defense fabrication, turbine structures, are in serious qualification pipeline today? And what revenue do we expect from them by FY28? Harshad sir, over to you.
Yeah. So yeah, very good question. This is the biggest area of challenge for the company, and for generally also for all companies and general industry, and also obviously for us. And post our downturn, we sort of downsized in a big way, and at that time we restructured the organization. And now, after that, we have again, after some time, come back into growth mode. And even with our new Bangalore plant, that has proved to be a very big challenge also, and also contributed to some of the delays and all that, because we could not get the head of that plant in place in time, and then we got a very good person. Unfortunately, he got a very good assignment overseas and he left, and then we've got another person. So senior level people getting right and getting them in place is very critical to our success, especially for the type of organization that we are running, because what we do is that each location is run by a business head who is responsible for, he's a profit center, and he's responsible for the P&L of that location. And therefore, getting that person right and stable is quite critical. And some of our senior staff have either retired or left us in the last 8 or 10 years, and some replacements have worked out, some have not. And that is an area we are still working on even as we speak. And we have to do some work there. As far as founder-driven or strategy is concerned, see, we are today at a stage where my role in the company is not really much in running the company as much as in looking at the future direction of the company. So I am mainly involved more in strategy and in technology, and in trying to sort of decide the path on which we are going. And that's why we have focused so much more on automation, on robotics, because robotics is an area, a business of the future, in my opinion. And though that's the area that I am sort of concentrating on. Otherwise, we have a reasonably, I would say, quite a strong senior management team in place. but that is to be more strengthened. Our HR function as a whole is not yet up to the mark. It's quite weak. And specifically on manufacturing side, we are quite strong. But the design development also, we are still sort of working in place. So organization definitely needs to be strengthened. And at the senior level, some more people have to come in. And then I mean it is it can it will be in place for the kind of size of the company and what we are planning. I think that should be in place. Uh, the uh, uh, the replacement obviously for the founder is a bit of a challenge, and I mean that's something that we have not yet clearly addressed. But I mean that's a role that will have to be played by somebody else in the future. But that is not yet 100% clear, what it is. But the management team is by and large in place and it is being strengthened. But yes, that is an area where we there is a gap, and that gap needs to be worked on. That is my personal area of focus is that to see that that is strengthened, because that is what is going to drive the business. So from marketing area and marketing angle, and some of the other sort of leadership challenges. But fortunately now most of our business heads are in place. Some more addition has to be done, and that should be okay, at least in the over the short run of 3 years, according to me.
All right, sir. So we have last question from Mr. Sonak Mayani. Why is promoter holding so low? Any plans of increasing holding?
Yes. So, we had during our very aggressive growth phase during 2003 to 2010, we had two preferential allotments which were made, and at that time management had not participated, and that's what had brought to start with itself. The holding was not has not been very large, but because of those two dilutions, the holding has come down to this level, and it has remained sort of constant at this level. And I mean, I have not been, I mean, we have not increased that holding, and neither I see any short term, any possibility for that. We recently had a small preferential allotment as well, but there promoters have also taken equivalent amount to their current holding. So the stake is likely to remain this level. I don't see in very short, I mean, in the near term, our ability to sort of increase stake beyond this level. And this is an historic sort of, I won't say problem, but a situation, let me put it. And that's what it is. Hmm.
Thank you, sir. There are no further questions from anyone. Would like the management to give the concluding remarks.
Well, this was a very long and I hope fruitful. It lasted much more, and I'm really happy that some of you all have taken so much time to try and understand what the company is doing. I would urge some of you, if you all have time, to sometime visit our new facilities and see in reality what is being done there. It will be quite interesting and exciting. So I'll invite you all to, if interested, to please be in touch and visit the plant and get a feel of a ground reality of the business. That will really, I would feel your confidence in the business and the company would drastically go up once you visit our facilities. So thanks once again for taking the time out and talking to me.
Thank you for joining Rishi Laser Q2 FY26 conference call hosted by Confide Leap Partners. Participants may sign off.